Hi guys, I'm sure you all are going to ask me why I'm having a stick to walk up here. I would like to say that because I am the best tax consultant in town, the Department of Indian Revenue sent their commissioners to come and beat me up. But the truth is, it's not so fun. I played basketball and I tripped on one of my friend's foot. So your question here that you have all, if you have come here to see, is to list or not to list. I'm not sure how many of you know this movie. It's Morpheus from Matrix. And there he asked us to go in a journey to see what we as a listing or non-listing can do. So that's what we are trying to do today. So Pura CC and the CSC, when they asked me to come and speak today, I remember the story of a founder who was talking to his colleague. The founder said to his colleague, "Son, I feel like a nation, a country." The colleague asked, "Sir, why?" "No, my wife is the Ministry of Finance. My mother-in-law is the Ministry of War. My daughter is the Ministry of Foreign Affairs." Then the colleague asked, "Sir, what are you?" "I'm the people. I just keep paying." So the reality is, if you're one of them, then listing is not for you. To list, you have to be sensible to understand that there are a lot of issues that you will face. And one of them, and many of them, are the fears that you have. So the first fear we will look at is increased financial disclosure. So if you have accounting standards, we have a lot of accountants, and I am also an accountant. We love our accounting standards. And accounting standards are good, but you inform your competitors of what and where it's going. So you better be ready for that. You better be understanding that you will have to disclose information. But after you understand that, most of you will see the benefits of it. The second one is increased regulatory oversight. So when you have regulatory oversight, again, you ask, what am I supposed to do? I have never had a regulator before me. Now I have a regulator. I don't know if SCC will invite me after what I say, but I'm here for now. So one of the ways you can see is through cases like the Touchwood case. Touchwood minimized the powers of the regulator. So if you look at those type of cases, you will be able to see what and how you can be prepared as a listed company going forward. What can you do? Third is a loss of management control. This is the biggest worry. There are some famous cases, a famous family business, I won't mention the name, that lost its control of the company. And that's why a lot of family businesses are scared today. They're scared because of that, not because of anything else. But you have to structure it. Our friends before me have told many ideas of how to structure it, and I will also look at some. Finally, it's an expensive process. I saw the last video, I don't know if you all realized, they said there are tax consultants, auditors, PR agencies, consultants, brokers, and that's all very, very expensive. So you're like, why in the world would I want to list? But the truth is, it's not like that. When you go through this process, I'll give you an example. There was a listed company a few years back. When we went through the process, they realized that they saved money. Maybe it is taxes, it may be other costs, optimization. Overall, they were more benefited by this process. Because sometimes when you look at it from a different perspective, when you look at specialists coming in, they know the business a little bit better. So that's the focus that you have to have. Now you have all the negatives, and here are the reasons to list. Okay, you have the greater visibility. Some companies here, if you are in the alcohol business, you are in the tobacco business, you have no visibility. So greater visibility is good. Some visibility is better than nothing, right? So it's good. Raising capital is the obvious reason to come. You have successful exits, and then you can leverage your balance sheet to buy and acquire other businesses. So we'll look at some of those things when we go forward. So now, this is the obvious one. Everyone says you have a reduced tax rate, 50% reduced tax rate. But I can tell you, I'm not sure of this yet, because there is no taxation without legislation. And legislation is not here yet. The government is in the process of doing it, and you better be ready for it. But if you are a standard company who has 24% tax rate, it makes sense to do it immediately. If you are a tobacco company, I don't know, you better think about it, because this could be like a Las Vegas wedding. I don't know how many of you have heard of Las Vegas weddings. You get married today and tomorrow you're divorced, right? So the laws are to come, and when the laws come, you'll be very ready for it. But for now as it stands, all aggregate taxes are 50% reduction. And that is a good thing. It's a good thing. So now you have inheritance and capital gains tax. Again, it's gone. Inheritance and capital gains tax is not there. And here is where that previous slide of the 50% reduction is of benefit. The reason it is of benefit is, now let's take an example of any of you holding an asset in your company, a land in your company. If you have a land and you're third or fourth generation, you've been here for 60, 70 years or 100 years, your grandfather's land is in the company. The value of the land is 0. Now it's ₹1 billion. If you are taxed the way the Indian Revenue thinks you should be taxed, it will be ₹240 million you will be taxed, because they consider it as a business asset. Right. But if you list, that won't be the case. The worst case, you will be taxed at 12%, which is very close to the capital gains tax, which is 10%, which is beneficial for you. And this is something you should have a look if you are having that type of scenario, those type of issues that you face. Then the next benefit that you have is this breaking news that came a few years back. No longer can you buy land in Sri Lanka. Is that true? So the answer is, private companies cannot buy before 2013. After 2013, it's no. After 2018, it's no again. Then we had another flash news which said foreign-owned companies listed can buy lands. You can have foreign-owned companies. But then again, here again the question is yes, no, and a yes. Now I would like to ask you, if you had a land which was acquired in a listed company in 2016, could you buy that now? Actually, according to the way the law stands, you can't. But going forward, if you have a listed company and you have a land in it, or if you had a land before 2013, you can buy as a foreigner. So there is a laguna in the law where 2013 and 18 is not looked at. But if you are in any other case, this is of benefit to you. I'll take an example. There was a company who is in the tourism sector. They owned a land, and they had ownership of the land in somewhere in the early 1900s. So the question is, now they wanted to transfer this. A foreign party was coming and wanted to buy 50% of the company. The question is, can he buy? Actually, according to the grandfather principle of any law, you can buy a land, even though the lands are restricted, even in a private company. And all land can be bought. So there are other exemptions, tax exemptions for foreigners. So these are things and reasons why there will be capital flowing into Sri Lanka. One of them is that our companies which have branch offices, say banks, organizations which have branch offices, have now been incentivized to keep their money here and invest it in the stock exchange. And if they invest it in the stock exchange, that will benefit you as a family business, and hopefully that will lead to growth of your shares and value. So now let's take some of the advantages of family business. I'm sure we all know of these advantages. You have loyal employees, long-term focus, entrepreneurial spirit, fast and moving and agile. These are some things which are of real value to you, and if you don't consider them carefully, when you list, you can lose them. My feeling and thinking is listing is not for everyone, but listing can be, for some people, their dreams come true. But for some, it can be a nightmare. So to understand which one it is, you have to look at it from your perspective, and if you do it right, I'm sure Dumit's dreams of getting 500 listed companies, we will get without any problems. So this is the three-circle model. One of my previous speakers also spoke about it. This was invented roughly right around the 1970s. And initially there were only two circles, family and business. And let's take a situation where there are people here who have a father who has a daughter who is not in the business. a son who is a business and who is running the business. Each of them have different perspectives, and you have to take those perspectives into consideration. And if you don't, you will have problems. So taking that, now here there are 7 subsets of ownership and different ways that a business works, family business. So if you understand that, that can be of use. So now here is a son who thinks this is a cash cow. I'm sure you'll have heard of this, the son who likes to spend the money. Then here is the granddaughter who thinks of her grandfather's legacy. So there are 2 different perspectives. Now, are we looking at these perspectives? If you look at these perspectives and bring the correct governance structures and correct business thinking to it, you will be benefited through listing. If not, you will have your problems. So now, retaining control. Now, some people say this retaining control is overrated. Right? But if you are a person who wants to retain control, it makes a lot of sense to understand what retaining control means. Everyone has a price. This is a very important concept. Everyone has a price, and the stock market will reach your price. So once there was a famous story of Abraham Lincoln, and Lincoln once met a terrorist who wanted to assassinate him. And when he was going to be assassinated, they caught him, the security agencies caught him. And Lincoln said, no, I want to talk to him. Please let me talk to him. Security forces, as they are, said, no, sir, you're the president of the country. They can't talk to you. No chance, we are not allowing them to talk to you. No, I am the president, I want to talk to you. So, okay, finally they decided, we will chain him to a chair, in a room, and we'll let you talk to him. Okay, if you chain him, please chain me also. So now we have a room of 2 people, one is Abraham Lincoln and one is another terrorist who is chained to the chair. Then the terrorist asked, sir, what is your price? Then Abraham said, no, I don't want price. I want to ask you, why are you here? And the terrorist started saying $1 million, $2 million, $5 million, $25 million. Abraham Lincoln tries to pitch in. No, nothing happens. Then he got to $100 million. Then suddenly you can hear Abraham Lincoln say, security, security, security. Come here quickly. Then the security guys came in and they asked, sir, he's still tied to the chair. Nothing's there. No, he's getting to my price. Please take me away before he gets to my price. So that's the reality that you have to face as a family business, that one member of your family could be tempted to do something like that. So that's what you have to do. So in that formation, we can have privatized control. Simply put, you can have a holding company or you can have trust. I would not advise trust because it is not tax optimal. But private companies are more tax optimal. And there is also no capital gains tax, which is a very big benefit. Every day in Sri Lanka, they talk about the cost of transactions. But what they don't realize is that capital gains tax, the benefits of it are tremendous. In the US or in other countries, the costs are so much higher because of trading costs are much higher because of capital gains tax. And the next option is you can have different classes of shares. In Sri Lanka, we have the government who has a golden share in companies. Things like that can be used and utilized to strengthen your control of the business. These are 2 ways. In other countries, which I think we are trying to change the Companies Act in Sri Lanka also, we have limited liability partnerships, which are other options which we do not have here. So now let's come to the next dilemma the founder or the person has, family business has. Transition. You have heard of this story where they say, pioneer. First generation is a pioneer. Second generation is a playboy. And third generation is a pauper. I am a second generation tax consultant, so that makes me a playboy. So I don't know how that works, but that's what it is. So in this situation, you have to find a way to transition properly and use why would you transition? Why would listing help you? Professionalization is one solution to listing, which listing will help you professionalize faster. It will help you professionalize in a speed that will allow you to get the benefits. So there is obviously the obvious ones, non-executive directors, you have committees and all that, and professionalization is there. But some say professionalization is lip service. We give lip service to professionalize. So for this, I learned corporate governance through this. This is the story that taught me corporate governance. There was a father who was seated on a table, at a dinner table with a son. These days, modern days, sons are told to ask questions, keep asking questions. So the son looked at the father and said, Dad, are bugs good to eat? Are bugs good to eat? Dad said, these are, the rules, this is disgusting, you're not supposed to talk about this during dinner. So please don't talk about it. So then they had dinner, and then at the end, the good father asked the son, son, why were you asking that question? Then the son looked at the dad and said, no, Dad, there was a bug in your soup. Now it's gone, so it's okay. So rules are like that. Sometimes rules, it can be given lip service, and sometimes rules can be overwhelming. So you have to identify rules and make sure that they work for you. If they don't work for you, it's of no use. Then the next part is valuation and exit. So it's the transition process. Some members of the family want to exit. So listing has a true benefit there. You can immediately, instantaneously, on that moment, know some value to the shares of your company. Yes, some might say it is overvalued, undervalued, but it is more accurate than any valuation done by myself or any consulting firm or audit firm. You have a market-based valuation that is coming, which means you can exit particular family members out of your business. So now we go for need for growth. This is the third situation. When you're going from a founder to a sibling partnership to a cousin consortium. So what's the biggest change? That single cake that was there earlier now is eaten by 2 people, and then it could be 6, then it's 25 people. Now you're going to ask me, how is listing going to help you here? You could use listing to raise capital. You can use listing to use your balance sheet to use share swaps, which can be beneficial to you and which will allow you to grow your business in the long run. And if you want as a family to stay together, one way is to grow fast enough so that everyone can stay together. If the cake is too small, then you have to kick someone out of the business. If the cake is big enough, everyone can stay. So now this is a statistic. Developed markets 30% and emerging markets 50 to 80%. Our family businesses are the driving force of big business, is family business. So now we're all good and well, Jithendran has come and told these things. Now the question you're going to ask me is, what are we supposed to do next? So the question to you is your intent, not your vision, is your intent clear in family business of what you want to do? If you understand the intent, then you can figure out where and what your business wants to do. If you don't have intent, you have an issue. So we had a Prime Minister of Sri Lanka who said, we are in an unhappy, some of you must have heard of this because it's very not too far ago. We are in an unhappy marriage, but we are delivering results. I'm sure some of you have heard of this. We are in an unhappy marriage, but we are delivering results. But we all know happy marriages deliver results. So if you have intent and perspective of your business, you will deliver and IPOs will deliver to you. So think smoothly, carefully and precisely, and you can deliver things, and IPOs will be great for you. Thank you very much. Thank you, guys.